Markets tumbling once again. We're down 2%, and that's what we saw in yesterday's session. It seems that we are starting to see quite a bit of risk aversion coming to the fore. Do you think that it's got to do with what we've been seeing on the global front? Of course, we've also got to take into consideration that the oil price has officially hit below that $70 a barrel mark.
I think it's really a combination of local factors rather than any effect from the international markets. I think if you look at the last 5 days, the market has been down about 5.7, between 5.7 and 6%. And if you look at when the market started going down, it was really when there was a spike in bond yields about this time last week. And with that spike in bond yields, it's possible that it attracted some investors who were going to the equity market back into the bond market. I also think it's also a combination of there's been a sway of results that have come out in the last 5 days from likes of Nigerian breweries, some of the banks, and the results haven't been that stellar. So I think that has also led to decreased confidence in the market.
We're also hearing that the central bank might be reducing its euro holdings. Do you think that's a wise idea, given that the euro has come under significant pressure? Surely they should be holding on, at least for now, and waiting for the euro to appreciate slightly? Or do you think that the central bank is just that cautious about where the eurozone and the euro will be going?
To be honest, I think the central bank's holdings in euros is quite insignificant compared to its holding in dollars. I don't think it's above 8% of the portfolio. So I think the announcement shows that the central bank is trying to be more active in its reserves management, but I don't really see it having that major effect if they decide to reduce the holdings, because it's not a significant proportion of the basket in the portfolio.
On the regulatory front as well, coming through from the central bank, a lot of talk about margin exposure and the kind of exposure that banks have. It's around 10% is what the central bank is looking for, and of course many banks have a deadline. What kind of exposure are we looking at here for most banks in Nigeria?
For a lot of banks, it's going to be very significant, especially some of the rescued banks. I mean, limiting them down to 10% could lead to another massive sell-off of shares in the market, because if they've been given to 1st of September to reach that 10% level, it could lead in the next few months to banks trying to reduce their exposure in the margin lending sector, which might lead to sell-off of shares which they're currently holding, leading up to that point to try and get into the central bank regulation. So it could lead to downward pressure on the stock exchange.
Olukayode, also just looking at the oil price, and I mentioned it earlier, we saw the oil price hitting below that key $70 a barrel mark. We also know that there's been a lot of talks about amending that 4.3 trillion naira budget purely because the oil price is coming under pressure, and of course the depreciation of the naira as well. How do you see this playing out? Because initially there was also a lot of confusion in terms of where the revenues would be coming from when the budget was signed into law.
Yeah, I think the original revenue profile of the federal government has, by most analyst calculations, has been roughly in line, because I mean the benchmark was $67. Oil for the whole of since January has been above that, and production was expected to be just north of 2 million barrels, and Nigeria is managed to be around that level. I think the main problem is that there's an inherent deficit, which is about 5% of the budget built into the budget, and that deficit is supposed to be funded by a sovereign bond, which is supposed to bring about $500 million, an oil licensing round, which is supposed to bring about $2 billion, and basically issuing more bonds. Now, the oil licensing round hasn't happened. The sovereign bond, we haven't heard any latest announcements on that. So what the government is actually doing now, because of the inbuilt deficit, they're having to draw down the excess crude account to make up for that onto those other revenue streams come on.
Well, you mentioned the excess crude accounts, and we know that the crude account has also been coming under pressure. I mean, about 3 years ago, it was sitting at around $20 billion, and right now it's also at very subdued and suppressed levels. Where do you see that going from here onwards? Because when you look at the global recovery that is currently underway, it's now being threatened by the fact that we could see some kind of default in Europe, sovereign debt worries coming to the fore, banking issues not only in Europe but continuing in the likes of the US, and of course a lot of focus has been put on China and where we'll be seeing demand coming through.
Yeah, I think firstly the excess crude account really is an anomaly in the system. It's not constitutional. All revenue is supposed to go to the Federation account. It was put in as a kind of buffer, and it's worked as a buffer. During the credit crunch and the global crisis and the economic crisis, it has been drawn down as it was supposed to be. And if you look at where Nigeria is vis-a-vis a lot of the Western economies and even a lot of the African economies, basically our debt ratio is very low because we're able to draw down on the excess crude account rather than borrow more money from the international market. So if you look at us, we look at countries like the UK and the US, they have over 100% debt to GDP ratio, and Nigeria doesn't have anything close to that. So we're in pretty good shape because of the excess crude account. I think in terms of the excess crude account, to try and legalize and structure its being, there's been talk about turning to a sovereign wealth fund, and looking at the Ministry of Finance, looking at going to the National Assembly with legislation to make a sovereign wealth fund so that you can have at least two aspects for the excess crude account legally enforced, which is a stabilization account as well as an investment account to invest globally. So I think the excess crude account has done its work, which was to form a sort of stabilization barrier for when the economy wasn't, the world economy or revenues are not coming in, to try and stabilize flows, and it's done that. Now what they have to do really right now is, because it's been drawn down so much, it has to be built up, and they have to try and put in legislation to make it an official constitutional kind of system.